Welcome back to another week of Stocks in Review for the upcoming week. In this special edition, we look at one of the top money managers of our time, James Simons, who last year earned an incredible $1.5 billion running the successful Renaissance Technologies hedge fund, where he manages $36 billion worth of investments. Some of his investments were up well over 20% last year. I could only imagine what his numbers will be for 2017. We're going to look at his top 5 holdings and get a sense for how his firm makes decisions on their stock investments. Let's take a look at news that can affect your stock portfolio. This week, President Trump spoke at the United Nations with some very poignant words regarding the current state of world affairs as he sees it. North Korea and Iran were both mentioned again. More hurricanes in the Atlantic continue to cause problems for the U.S. and a variety of Caribbean nations. As of this week, most of Florida had finally got their electric service restored. However, Wednesday morning, Hurricane Maria pummeled Puerto Rico and will probably go down in history as being one of the worst hurricanes to hit the territory since the early 1900s. The Mexico City area was hit with another major earthquake, just 12 days since the last one. It registered 7.1 on the Richter scale. Hundreds are dead. In cryptocurrency news, Bitcoin and Ethereum came back from the trenches after fallout with the Chinese regulators. As of Thursday, the low for Bitcoin this week was just over $3,000, and Ethereum dropped to a low of $220. Both are significantly up and have been holding well since the weekend. Digital currency experts are pretty confident that Bitcoin will likely splinter off again before Thanksgiving, which will create the world's largest cryptocurrency. As we approach November, expect volatility to increase even more than usual. 3 weeks ago, I mentioned that we'd start following the top 3 performing ETFs for 2017. And for the latest week, 2 out of 3 are up and the third is about the same. Ticker symbol FBT started off just over 2 weeks ago at $124.32 a share. That one is essentially flat at $124.19 this week. Our Chinese ETF, MCHI, started off just over 2 weeks ago at $61.60. Now it's up to $64.27 a share. That's an increase of 4.2% from our initial suggestion. Ticker symbol SPXL started off just less than 3 weeks ago at $35.76 a share. Now it's up 5.4% at $37.79 a share. On watch for the coming week, I have Northern Dynasty Minerals, Tenix Therapeutics, Protalix Biotherapeutics, AMD, 22nd Century Group, and Aurinia Pharmaceuticals. Unless something happens Thursday, Northern Dynasty has been moving steadily on up in anticipation of the announcement of a partner. Don't be shocked if there's a sell-off in the days or the week to come once a quarter ends if a partner is not announced, or if we get another awful article from Seeking Alpha. On the monthly chart for Tenix, I see an inverted head and shoulders chart pattern setting up, which is usually a sign that the stock will rise. Something should be happening very soon with this. With PLX, after significant drops through the summer, momentum has been building up and there's been a steady rise in the share price, as well as positive price movement for the last several weeks. AMD and Tesla announced late Wednesday that they'd be working together on a self-driving car chip. That sent share prices up 6.5% in the after-hours trading. Watch for more volatility in the new week. The technical signals on the 22nd Century Group stock continue to look positive. Something might be announced within less than 3 weeks. Watch this close. Aurinia stock has just started another upward trend, and there's 2 conferences coming up next week, as well as anticipation for the October meeting. Another one I'd watch close. A new stock for the week that I wanted to bring to your attention, which most anyone over the age of 18 has heard of, is Caesars Entertainment Corporation, ticker symbol CZR. This iconic Nevada-based entertainment, hospitality, and casino company has 31,000 full-time employees and operates a lot more than just a casino in Vegas. They operate a variety of nightclubs, restaurants, bars, and buffets. At the beginning of the year, they ran 12 casinos in all. They also own the World Series of Poker tournaments and the brand. 7 years ago, they adopted the current name and was previously known as Harrah's Entertainment. Analysts rate the stock as a strong buy overall, and the company has been upgraded twice this year so far to buy and outperform. I think it'll easily reach $15 to $16 by the end of the year or shortly thereafter. The stock has been very bullish in the last 2 weeks, and I see higher highs and higher lows. It will be out of bankruptcy by the end of the year, so effectively it'll be wiping out $10 billion worth of debt. Shares are up over 30% for the year. Not a bad medium-term hold for 3 to 6 months either. Now we're going to take a look at legendary hedge fund manager James Simons. He founded his private New York hedge fund in the early 1980s and is an accomplished mathematician and philanthropist. He has a net worth of over $18 billion. He's what we call a quantitative investor, or quant as some people say. This type of investor specializes in the application of using statistical and mathematical techniques to make their stock purchase decisions. What used to be done by hand in calculators and analysis has long been replaced by computers. But the models and the eventual algorithms that came from math experts like Simons and his team of managers who take care of billions and billions of dollars a year successfully for decades. While the details of his firm's investment strategies are proprietary, his core strategies have been discussed in numerous forums over the years. In general, his philosophy is to maintain short and long positions in firms that limit investment risk. The goal is to reduce the risk of adverse price movements in one stock by choosing another stock or body of stocks that will offset the position, thereby limiting risk. One method of hedging is to go long on one stock and short a stock that competes with it. Another popular method of hedging is using put options on a stock that you really like which has had a healthy run-up. If you're concerned about the general stock market correction that could be coming and losing those gains, instead of divesting from the stock that you love, you can buy a put option that gives you the right to sell X number of shares at the exercise price before the expiration date. Then, no matter what happens, you get that stock at the exercise price that was predetermined regardless of what happens to the price for the stated period of time. If this is confusing, I'm sorry, these are considered advanced trading strategies. But just so you know, the main premise of hedging is to decrease your overall risk of loss with your portfolio. Let's take a look at his top 5 investments and how they've done year to date. Please remember, investing in stocks carries risk. Never invest more than you can afford to lose or not have access to for an extended period of time. If you enjoy our videos, we appreciate if you could click like and subscribe. Have a great day, and we'll see you next week.